Okay, so let's talk about how we prepare a statement of cost of goods manufactured. So the first thing I want to tell you about that is instead of buying inventory to resell, we are now making our inventory. And so now we have three categories of inventory. If you were buying and reselling, you would just have one category called inventory, or merchandise inventory, which really would be finished goods because they're finished and they're ready to sell. But now that we're making inventory, we're going to have three categories. The first one is raw materials, and that is what our wood is before we start to work on our guitar. Once we start to work on it, we're going to move it out of raw materials and into work in process. That's what it's called the whole time we're working on the guitar. And then once we finish our work on the guitar, we're going to move it into finished goods. Okay, so we're going to move it out of work in process and into finished goods. Now you're going to learn how to journalize this in the next chapter. But for now, you just need to know about those three categories of inventory because you're going to see them on these statements we're going to talk about. Now, before we look at them, I'm going to remind you about a calculation that you already know how to use and you know how to do, but you're going to see it multiple times on these statements. So here it is down here. Anytime you want to know how much has been used up, we did it with supplies back in chapter 2 in accounting 1. You start with your beginning balance. Okay, so for example, if we were doing supplies, you would be beginning supplies balance. Then you would add up your purchases. Okay. And then that gets you to all your supplies available. If you subtract out your ending balance, that will tell you how much supplies that you've used up. So this calculation you already know, but now we're going to use it several different times. So the first time we're going to use it is in the cost of goods manufactured statement. So from this statement, you're going to figure out how much it costs you to manufacture your goods. So this is also on your PowerPoint slides. And you're going to, I'm going to zoom in just a little bit more so we can see this good. You start off with your work in process inventory. So that's this middle one that we were talking about up here. Your work in process inventory, beginning WIP, so your beginning balance. Because we're talking about actually working on this guitar, how much money did we spend working on this guitar? So that's what we're trying to figure out here. So we start off with WIP, beginning. Then we're going to have costs to add. Okay, in our situation, the costs that we're going to add are going to be made up of 3 items. So the 3 items that we're going to be making this up would be direct materials, direct labor, and factory overhead. Direct materials, direct labor, factory overhead. So these are the costs that we're going to be adding. So direct materials, I'm going to write it here, direct labor, and factory overhead. Okay, so cost to add, so I'm on this line right here, and then again I'm adding my costs to add are direct materials, direct labor, and factory overhead. So my direct materials are right here. My direct labor is right here. And my factory overhead, total manufacturing overhead or factory overhead is right here. Only for direct materials, I wasn't automatically given how much materials I use. Again, I had to calculate it. I calculate it using the same scenario, the beginning, materials inventory. So I'm talking about my raw materials that I started with, beginning inventory plus the purchases gets me to my available for use, subtract out the ending, and that tells me my cost of direct materials used. All right, let's keep going. We have direct material, direct labor, and factory overhead. When I add my direct material, my direct labor, and my factory overhead, that gets me to total manufacturing cost for the period. Total manufacturing costs incurred during the period. My direct materials, direct labor, and factory overhead tells me how much I incurred during the period, and when I add them up to what I started with, beginning up here, beginning WIP, work in process, that gets me to my total manufacturing costs. So I'm right here, total manufacturing cost. I subtract out my ending WIP, and then that gets me to cost of goods manufactured. So I've included that right here under used up. Okay, cost of merchandise sold, cost of goods manufactured, or direct materials used. That would be those calculations. So it's the amount used up here in this situation when you do beginning WIP plus your manufacturing costs incurred minus ending WIP will give you the cost of goods manufactured. So I sort of have one of these calculations inside another calculation. Now we're going to place that where it belongs on the income statement. That bottom line right there goes on the income statement. And you're going to use the same calculation again, only this time I'm going to be using it for finished goods to find out how much my cost of goods sold are. So you do beginning finished goods right here, right there. What I added during the period are called cost of goods manufactured. Okay, cost to add. That gets me to my available. All right, which is here it's cost of finished goods available. Minus ending balance, so minus my ending finished goods. This gets me to my cost of goods sold, used up. Again, it's using the same scenario right here, the same scenario. And then I can finish out my income statement just the way you know how. So that is how you do a statement of cost of goods manufactured and an income statement. What I suggest you do is just take a few examples, put it in a few times, and it will start to make more sense the more times you do it. There's not really a lot to it. It's just a matter of understanding the basic format, which is beginning WIP plus these three items minus ending WIP to get you to cost of goods manufactured. Let me know if you have any questions.